You're a fintech founder who's staring into the abyss. You're about to lose everything that you've built. You've no way of getting funding, and every sale is losing you money. What do you do next? And how do you turn around a business that has only months to survive? I'll cover this in today's Fintech Chatter. I'm Dexter Cousins, your host and the founder of Tier 1 People, the executive search and recruitment firm dedicated to helping fintech companies hire exceptional talent. Today's guests are Nathan Walsh and Michael Starkey, the co-founders of Athena Home Loans. We last featured Nathan and Michael back in 2021. Athena were flying high. A year later, and rapid interest rates and a capital markets crisis had a sudden and immediate impact on their business. If they didn't act fast, they'd be out of business in a few months. I chat to Michael and Nathan about their journey over the past 4 years, how they've navigated rocky waters, and how they're now scaling the business and getting even greater growth. But before today's show, just a big thank you. We've seen some amazing growth on the channel this year, and it's all down to you sharing the love. It's also helping us book some really amazing guests. So if you are new to the show, make sure you follow us wherever you listen to podcasts. And if you're watching us on YouTube, hit subscribe and that notification bell. And if you're feeling super generous, leave us a comment and please share this show if you enjoyed it. Now on to today's guests. Nathan, Michael, welcome back. 4 years since we got together and had this conversation. If startup years are like dog years, then that's kind of 28 years since we last spoke. I'm sure there's been a lot for us to talk about. But before we do, maybe you could tell our listeners who haven't maybe tuned into that first show who Athena Home Loans are and the big problem that you solve.
Awesome. Well, first off, Dexter, great to be here. And hard to believe it was 4 years. It does actually feel like it's closer to 28. You call that right?
I was going to say there's a lot more kind of grey hairs, no hairs.
Yeah, 100%.
I wish I had grey hair.
Yeah. So Athena Home Loans, we're a specialist Australian home lender. So mortgages, helping people buy their home. We founded with a mission to help Aussies pay down their home loan faster. So really with that idea to say this is a massive $2.4 trillion market and it just wasn't really meeting the needs of consumers. And I think what's interesting though is, Mike and I have been at this now for coming up 8 years. So, when we last spoke was roughly halfway through the journey. Just how your views of the opportunity and what is the problem you're solving can evolve. Really that idea to say market of this scale where NPS, so net promoter scores for consumers are typically mildly negative, i.e. more detractors than advocates. And so a real opportunity for us to go out there and understand how do we change the game for good? What does it actually look like to be better? And so absolutely for those in that position, pay down your home loan faster, but there are so many broader opportunities that we sort of together work through. And probably the thing we just mentioned is we're a B Corp. So we really are about how do we bring profit and purpose together. And so we really are trying to put some real muscle behind that idea about what can we do to make life better for people with a home loan.
So, I guess Nathan just mentioned there, it's actually closer to 8 years than the kind of the 6 of that first 2 years. How did you both get together and decide that you were going to try and tackle this problem?
Yeah, well, we both worked at NAB for a good amount of time. I think you were more than 10 years. I was just near on 9 or 10 years, and we were part of the same leadership team. And we were sort of, it felt probably unlucky at the time, but lucky in retrospect that NAB was going through a funny phase, I think, where people like Nathan and I, we probably felt like we'd sort of reached a little bit the limit of what we could do within that organization with the leadership at the time. And we got together just over breakfast once. It was February 2017. And Nathan had this vision, sketched out this vision of actually the way funds flowed in the market, which I still think is super relevant to where we're going and what we can achieve with Athena. But interestingly enough, that was a vision around the flow of debt and funds in the market, as opposed to technology and what they could do on the borrower side, which, as Nathan said, turned out to be a good opportunity as well. So we got excited about that in February, and by April or May, we'd resigned. So a lot of people thought we were cooking that idea for a long time because we had known each other for a long time in the bank. But we really got excited about the idea quite quickly and sort of firmed up some sources of equity capital during that period, and then worked out we could raise the money and get started. And we were within 2 or 3 months, we'd resigned to start this business.
One of the questions that I kind of tend to ask everybody on the podcast is whether they're more of a tech fin or a fintech, as in, you're kind of getting creative around financial instruments and innovative on that side. Now you've kind of, you're 8 years in from that diagram that Nathan mapped out. How would you describe Athena in that context of a tech fin or a fintech?
I'd say we're a fintech if the emphasis is on the financial services side, but I think we're really probably way more tech as source of advantage than maybe Mike and I had appreciated. I think just what the engineering teams, the product design, it is quite incredible.
Yeah,
like what can be done. So I would say there's a real balance, but we're not doing original research down deep into the core of technology. What we really have an opportunity into a vertical that's well behind the world is to how do we actually bring really modern design, the agility and opportunity that presents, and then deploy that in a way that's really benefiting the two sides of our business, right? Borrowers and brokers, and then clearly the funding side as well.
Yeah.
Incredible what is therefore possible. We are up against, banks, major players that are always going to have a massive scale advantage in this space. So for us, it is about how can we move at speed? How can we deploy insights, deliver better solutions? And so that really is bringing, how do you run financial services? How do you work within a regulated category? How do you create a platform that can move billions of dollars of money, but do so in a way where you're bringing some extraordinary talent in terms of the tech side as well.
There's a mantra in kind of startup world, move fast and break things, which is not really applicable to fintech. Because if you do break things, kind of, there could be a jail sentence at the end of it. How have you balanced that kind of, absolute requirement to move fast at pace, but also work within the bounds and the restrictions of regulation, compliance, the capital restrictions as well?
Well, we have I think there's probably a few parts to the answer, but we hired a very experienced team right from the get-go. So if you look at the people running our product function, treasury, risk, etc., they've all got years of experience, right? Sometimes in major organizations where obviously they're dealing with highly regulated markets. They're dealing with very reputationally sensitive issues, right? Like when someone takes a home loan out and, they get into trouble, how do you deal with those sorts of customers? We've got a lot of experience in our team in that. And we've got a very strong risk function, and we're relying on funding partners to lend us billions and billions of dollars of their money. And so they put us on a lot of scrutiny there, Dexter. And so we're forced to take these issues extremely seriously and put all of the frameworks there in place to deal with that. But actually, the advantage you have when, as Nathan was talking about, when you're starting with a blank sheet of paper and you have a cleaner platform with end-to-end data that flows all the way through from acquisition, originations, to servicing, all the way to the back office and the treasury functions, you're actually at a fair amount of advantage there in satisfying those requirements because you've got clean files. When our funding partners come in and examine our operations and look at the files that we've written, invariably they find that they're just at a very clean position, and we're able to demonstrate not only the performance of the loans. We've written $9 billion of loans and we haven't lost a cent, and our arrears rates are typically been an order of magnitude lower than those of the majors. So not only the performance of the portfolio, but also we can just justify why we've written every file because of how systematic it is and how clean the data is. So yeah, it's a space that we have to take very, very seriously, but we think we've got an advantage in doing so. Would you add to that, Nathan?
Yeah, I actually think what you just framed is actually the most important question for someone to think through if they're looking to play in fintech.
Yeah,
that you're not just thinking of almost naively what's desirable and then not really understanding all of the constraints.
Yeah.
There's reasons why finance works in certain ways. And so think of it almost as a double loop design where you need to think about what are the requirements to really do things better for a consumer or a broker or your channel partners, etc. But equally, what is both the letter and the spirit of the regulation in which you need to operate? And how do you make those things consistent and work through? Because I think that's the difference between a really great insight that could be scaled and actually deliver impact in a great business versus something which is, the world doesn't quite work the way you'd like, but you've not really thought through the idea that, you need to have, fuel for the car or whatever component. There is an opportunity for a startup to solve both those problems better than an incumbent, because at its heart, many of the core regulatory problems are ultimately just data access and management. And when you really get really careful and tight about thinking through the information that you need. So in our scenario as a lender, we need to think about what does AML obligations mean? What does ratings agency obligations mean? What does ASIC require? What does, and you start to go through, that's the information that's needed. Then how do you develop systems that can capture, manage and analyze those things effectively? So there is a real double loop design problem where you can start to say, yes, let's develop something that's a better answer, but equally have something that's meeting obligations in letter and spirit better as well.
One of the key challenges, I believe, that what you've just mentioned there is that you're at the forefront of innovation. So therefore, from a regulatory perspective, a lot of the things that you're trying to do might not have been done before, or it's uncharted waters. And the challenge I've found for a lot of people, particularly in compliance and risk, is they tend to see the world very much in black and white. And you guys are operating in all the shades of grey that, not that where there are things that are just kind of unknown. And if anything, you've got to be the kind of trailblazers for, changing some of those or even creating some of those regulations and that don't exist.
So I would say we're probably a little different than some others in that we are really at the heartland of meeting a responsible lending obligation, writing good quality credit, so we're not we're absolutely operating in the black on all of those dimensions and not pushing boundaries. I'd probably say what we're really innovating on is how you do those things. You sort of think about the compromise of making sure this is the right loan, but also giving a great, fast, easy experience. How do you bust the compromise between many of those dimensions about, speed and quality, So that idea around if you move fast, you have to break things.
Yeah.
Well, how do you move fast and not break things? Is actually the much more interesting question. It's sort of self-indulgent to sort of say, let's move fast. And then, it's not just in regulated financial services. You kind of look to some major players, which have taken that philosophy way too far up the scale curve.
Yeah.
We're all bearing a bit of
it. The analogy I use is the kind of reckless driver who drives off into safety but leaves the pilot behind.
Yeah. So I think that idea to say you want to be able to move large amounts of money around safely. You want to have consumers who are making some of the biggest financial decisions many will ever make in their lives. You want to step through all of those points and actually end up with things that deliver better experiences. And so I think there's an awful lot of really, really fascinating challenges. And I think part of the reason why fintech is such a fascinating vertical is inherently it's a more complicated problem set because you do need to be thinking about multiple perspectives.
Yes. I guess the other challenge as well is distribution, and you're working in a space that is probably the most fragmented in any sector in Australia. I think is it more than 70% of home loans come through a broker?
70%.
Right. Yeah. I mean, how many brokers are there in Australia? That'd be.
There are a lot of brokers, but they are organised under partnership and aggregator groups. And what we found, and as we've evolved from being purely just a digital and direct player into dealing with those partnerships, and we've got now Mortgage Choice as a major partner, which is part of the realestate.com.au group, and then we've got Loan Market Group there, which and both of those originate tens of billions of dollars of loans every year. And what we're able to do is work with those groups and with the brokers that are part of those groups to really speak to the benefits of our proposition, give really great service to those brokers, and then get their support in distributing our products. So yes, there's thousands and thousands of brokers, but they all organize into partnership groups that we're able to really have strong and really deep relationships with, that's been a huge think, feature of the last couple of years of Athena. There is embedding ourselves into those big groups. Yeah.
So I guess the other major challenge, and it's a one that probably none of us foresaw, 2022, we started a period of interest rate rises every month. I think it was 10 or 11 consecutive ones. Being a business that relies on a loan book and capital management, what did that kind of present to the business in terms of challenges, and how did you navigate through that period? Because I would imagine it was, would look pretty rocky when you were going through it.
Yeah, I think of Game of Thrones is the White Walkers climb the wall. Look, for us, it's probably less just about rates going up or down, right? Because variable rate loans, they move. But it's probably the same time that was happening because there was a, inflation spike right around the world. Equity markets were eating that. There was a real concern around debt markets. So there was actually sort of a bit of a disruption of everything happening all at the same time. And so that absolutely was a really challenging, moment in time, right? So the real reason for that was those who are funded by debt markets like ourselves, those costs flowed through straight away.
Yeah.
But the big banks have the benefit of both deposits, which they were slow to pass through the benefits.
Yeah.
So their costs went up much slower in the market. But also what's got to be, an all-time great deal where there was $188 billion of nearly free money that the RBA was giving them. I mean, literally tens of billions of dollars to the larger players. So at the point where our costs were going up by well over 4%, we were competing against players who had a sweet deal where they were paying almost nothing for big chunks of funding. And so I think what's interesting, and this is probably again coming back to the 28-year dog year type view since we last spoke, but it is interesting just how you really do need to be thinking about the seasons can change. And so in our market, that was a bit of a winter going through. What it did though is really give us an opportunity to think quite differently and retool a whole bunch of different aspects of what we did. So broadened out product set. I think Mike was referencing the big partnerships we've got in place, et cetera. And so, we've sort of evolved our business system to be something where, frankly, the market's as competitive as they've ever been, and we're growing at rates we've, never seen before.
Yeah.
So I think that's the resilient story of what people showed those pictures of that sawtooth journey that you're going to be on as a startup founder, and we've definitely experienced the awesome shit journey along the way. But equally, I think that need to constantly look back at your business model and ask some foundational questions. And frankly, that leads to some opportunities about, okay, we need to think about some things differently about what we're delivering to consumers and how we're actually funding that and what does that ultimately mean.
Yeah.
And so that was a challenging time, but actually some stuff that we're just benefiting from enormously about just the great work teams did during those periods of time to think, these are dimensions we need to evolve on.
If I cast my mind back to the GFC, I kind of distinctly remember the big four banks really pushing hard on deposits because of the challenges that they had around it, funding their lending books. What experiences did you get working within a big four bank that kind of gave you some, I guess, kind of reassurance, to get through that period that you had to go through? Because it was pretty unexpected, and it's for people that haven't experienced it before, it would probably be game's over. There's no way out of this.
Well, there's probably two things. So one is things are cyclical, right? So, and we've seen already a few cycles just in the short time that Athena's been around. So, for example, at the moment, debt capital markets are fantastic. We're about to do a huge term deal, and there'll be lots of demand, and our funding position is, as strong as it's ever been at the moment. But we went through that period that Nathan described, right, where our funding costs versus the banks really widened, right? So that was challenging. So things are cyclical, and you do have to play a medium to long term game, and you need funding partners who are willing to back you through that journey, knowing that it is cyclical. But I would say the other thing is I'm not 100% sure working in the big four banks is a massively good preparation for doing what we're trying to do in the sense that you don't, when you're inside those organizations, realize just how powerful the implicit subsidies are. Now, in the case that Nathan talked about, there was an explicit subsidy, like literally $200 million of free money, not even indexed to cash rate. So that would have been billions of dollars to the bottom line, and they just sort of flipped that into mortgage competition there. So that was an explicit subsidy. But even the implicit subsidies, the fact that AA rated organizations are able to raise money cheaper than we can sell AAA rated paper.
Yeah.
That's a result of the government, the implicit government guarantee of the big banks. So, when you're in those organizations, I'm not sure you're as aware of just how much an extension of the government they are through various parts of the cycle. So I think we were a little bit shocked being outside of the system at how, when a crisis comes like COVID, all of the focus of the government subsidies gets channeled through the banking sector in Australia in a way that it doesn't in other markets overseas.
Yeah.
And I think it's an opportunity for the regulator to step back and just sort of ask themselves some questions around what the impact of competition is when they distort the market to such an extent. And Nathan's done a lot of thinking about this as well, which around that.
Yeah, I might almost come back to the question away, which is what's the value of that? And on the resume, and then we can sort of talk about the regulatory side. But I'd say every entrepreneur has their own journey.
Yeah.
I was quite late in working out just how awesome it is to be in this mode. And if I was giving advice to someone in their 20s, I wouldn't say go and work in a big bank for a decade like I did. I'd say go and get started.
Yeah.
But I think every background that everyone comes from will have their own strengths and weaknesses. And I think you've got to play to your strengths. And I think the strengths that do come from a large organization, you do learn excellence in certain functions, right? So I think those big organizations do have very smart people working with very good intent and working hard. But because of the complexity of the business system they're in, it's often like the efforts of the collective 30,000 people aren't quite what you'd want it to be. And so I think our insight coming out of that is, many of the people who are on the finance part of the fintech are coming from those organizations and their experience is incredibly valuable. But we've got to actually say, but how do we get the business system not to have the complexity to get the 1 + 1 + 1, equals a lot more than the 0.3 that a large organization can do, which a lot of that is not just excellence in each function, but how do things work together, right? How do you get to the point where product and sales and risk and finance and all those teams actually mesh together incredibly well? Because what a customer ultimately wants is the sum of all of that coming together. And so I think that's, in some sense, the inefficiency. So my biggest learning of working in a big bank is not to be afraid of competing with big banks. That's the piece. But it's not because I think it is being quite specific about where does simplicity and where does focus and where does agility give you advantage versus these are all the spaces, for the reasons Michael was sort of referencing, that, there is big advantages in a market like Australia where there's oligopolies in way too many industries and big players have scale and, implicit regulatory support and all the other components. So that's the balancing act I think we'd sort of get from backgrounds. You get a bit more of an understanding of that. But I'd say probably if I got to do the do-over, I'd probably take the snakes and ladders ladder up and jump straight into getting started on the entrepreneurial.
We talked pre-show about kind of productivity and some kind of pretty sobering numbers coming out of Europe and Australia of where we rank in terms of globally. And I think that kind of, two of the things we talked about were one, oligopolies and competition. But then I guess the other being the kind of, the not necessarily resilience, but I guess the challenges that face startup companies here in Australia, that there just isn't the support to get them through those tough periods where they then can become, the global tech player or the big player. And we've seen some incredible, yourselves included, Zip, just amazing, like kind of almost like Rocky style kind of storylines of resilience and getting hit and down and kind of it's at the 9 count and you're back up, and it's been incredible to watch just the absolute grit of people within the industry here in Oz. There's also, I guess, as you mentioned, Michael, the kind of seasons, and you've kind of come out of the winter and into spring, and there was a big announcement last year as well of some investment. Do you want to tell our listeners a little bit about that?
Yeah, so So REA, and that's just made the newspapers back in October, I think we closed the deal. So they invested, they bought 20% of the business. Involved in that transaction was a bunch of primary investment into the business as well. That came after a relatively long-standing partnership that we already had in place. That was a very successful partnership because we were together writing a lot of loans with REA through the Mortgage Choice broker network. The genesis of that, I mean, we had been in conversation with REA for a long time. We love the capabilities that organization has, right? In terms of the tens of millions of people that go to their website every month, involved in the whole property ownership journey. The fact that they're interested in the adjacencies around financial services. So we'd long wanted to partner with them, and we'd actually pitched a few times and been in conversation with them for a number of years. And then we did it in parts. We started with an arrangement in which we were jointly building these products together and selling them through their network. And when that worked really well, then they decided that they wanted to take an interest and get closer to us. And so they've been an exceptionally good partner for us, and I think we've been a great partner for them as well because we bring a capability that takes a lot to build. In terms of a mortgage origination and servicing platform and treasury capability. So that takes a lot to put in place. And so the benefit that REA get is they're able to access that. And the benefit we get is to get close to a business with millions of customers and thousands of brokers.
Were you ever on the kind of other side of a partnership when you worked in a big four bank?
Peripherally, I mean, at some stage REA were partnered with NAB is common knowledge and other organizations at various times. But it, back to what Nathan was talking about before, it is actually very difficult for an organization the size of NAB to align themselves properly around a partnership like that, just because of the number of people that need to be invested and bought into it. And I think, I want to put words or speak on behalf of REA, but I think what the appeal of dealing with someone like Athena was they were in the room with Nathan and me. The decision makers were right across the table, and so it's not talking to the owners. You're not going away and then trying to negotiate with 10 other conflicting stakeholders in your business. So I think that probably makes it easier for a business our size to put in place a relatively involved partnership, right, and get it done at speed.
And so, again, coming back to your sort of point about, oligopolies, I think it's a fascinating one for a startup to think about when does a partnership make sense and then how do you unlock that value? And I think there is, where it goes well, right, you can combine the innovation, the ability, the agility, the technical capabilities, all those other components combined with real scale. But clearly there's lots of stories where those things don't.
The unlocking the value piece. Right?
And I think what's been so extraordinary is it really does take, it's an organization, but it's also an individual piece. The individuals working together. And we had the benefit of some just really exceptional executives that were sponsoring and delivering on the REA and Mortgage Choice side. I think we really assembled and had our very best team members focused on this as well. I think cultural alignment, so really actually having that same belief that we can go and do things very differently and deliver for consumers. And so I think there is that idea to say something that sort of looks good on a PowerPoint slide, to make that real. There's an awful lot of thinking and understanding and commitment and almost having the right joint motivations. The payoff, I think, is exceptional, right? So I think we would come in and go, this has ended up being a real important evolution in our own business story. And the idea of, in their case, 1,000 brokers, absolute experts in the market, real insights coming through. And we've really gone through a process of being able to co-design with thinking about that as being just an exceptional group of people. So not channel, a real partnership right down in their view. And then equally, there's those opportunities clearly to scale on the digital ecosystem there as well. So I think it's one of those ones which for a founder is such an intriguing idea, but some real investigation and thinking to say, what is it going to take to make this a success? Given there can also be some real frustration. Yeah. Some of the war stories we're hearing, people tried some great ideas, but just never quite lands.
And you talked about the kind of cultural match there, and you rightly point out that, hey, it's not words on the wall, right? And I think one of the greatest litmus tests of whether there's a cultural alignment is in the negotiation phase. because then you really see whether this is a partnership or whether
Yeah.
we're getting there.
Yeah.
Yeah.
I agree with that. I mean, it sort of comes down to there is a real implicit information in are the easy things easy and then the hard things that can be worked through constructively. Because if you get to the point where, what should be easy ends up being hard, then that possibly there's a signal in that about what does it mean. And so that's, again, I think where we've been really lucky and very, very blessed about, having partners who really are seeing some of the core things that were most important to us. So, we're all about fiercely fair value and, they're all things that were valued and embraced by our partner. And then equally, the time that the brokers have really been willing to say, this is what will make it a better solution. Here's the gaps that I have to serve my customers better. And so those real opportunities to come up with some understanding, and they've been quite foundational as we've gone on our own product journey and roadmap and build out with some of the real value of that expertise as part of the journey too. So I'm with you completely. It's not about what does the coffee mug say. It's what do people do.
Yeah.
And then how do you get the learnings early and then think about what are the things that are going to set things up for success.
We've had great set of partners across our business. It's not just, so REA is obviously a really important one. And then other distribution partnerships like the Loan Market Group one, absolutely fantastic partnership. But equally on our funding side, we've got exceptional partners. We've written $9 billion and we've had billions of dollars worth of funding come in the door from dozens of different funders. And I would say we've had exceptional partnerships there as well. And then obviously on the technology side, there's different components that we work with. So I think, you're never going to be the one delivering every single step of the value chain. And so you do need to work.
Do you have a framework at all for kind of deciding whether a partner is going to be the right fit or not?
Well, yeah, yep. But in some ways, the simplest one is bringing it down to, for yourselves, being clear on what's important and then being consistent and executing on what your own commits. Because I think that's the piece where many of these are not fast food. They're things that the kettle's on the back of the stove, bubbling away. And then people are sort of saying, okay, I like the story, but let's see the delivery. And if you're then at a point where things come through, for us, we ultimately have opportunities. I mean, $2.4 trillion market, right? So there's opportunities on both distribution and funding, and we want to sort of balance both sides of that. You don't want to just, on one and not on the other. And so we are at a point where there are real, we don't think the idea is how do we go and do 100 small things with different partners, but how do we pick some really exceptional people who are, there's really alignment to what we can deliver and what they bring as well.
Yeah.
And so when you're then at a point where there's some real fundamental economic truths, some fundamental consumer value that's going to get unlocked, et cetera, then it just becomes a really interesting execution problem of making sure you deliver what you've jointly committed.
I think personal relationships have played a big role in our story as well, to be honest. And I think it's, we talked before about, we've wanted to do this 10 years earlier. Personally, I don't think I could have, just with the importance that the relationships that working at NAB was actually fantastic in terms of the number of people we met from every corner of the industry. And a lot of the people that, from your past life end up in some capacity, whether it's people from the distribution side or the funding side or the technology side. That's been critical in our journey. So it's often less about a hard framework and more about the trust you have in a relationship that you knew that you had from a past life. And that's been a huge part of our story. If you think about it, think about how we got off the funding. Yeah.
This isn't scripted, but this is exactly what I wanted to talk about next, which is, I guess, the journey that you've both been on together and what you've learned about each other through this last 6, 7 years or so, 8 years. What do you I guess first of all, like, what are the changes that you've noticed in each other? Maybe if you go first, Michael.
Yeah, that's a good question. I mean, we worked in quite separate parts of the business. We happened to work on the same leadership team together, so we knew each other in that respect. But we didn't observe each other that closely, did we, before this business? No, I think Nathan has huge integrity and a brilliance there, which and you get exposed much more to that when you're working closely together with someone than when you're just a colleague at working in a different division. And so, how have you changed, Nathan? I don't know. I think you're pretty much the same bloke you were when we started 7 or 8 years ago. I think we've both probably grown into the role because there's no safety net when you're doing what we're doing. Whereas at the bank, there's plenty of safety nets.
Yeah.
And I think when you've been in the trenches, I mean, if it's all beer and Skittles, then I think you probably don't really test one another's mettle. I think the way in which Nathan led the business through what was pretty challenging, probably year and a half there when we talked about the earth moving beneath our feet. Now we're going great again, right? So it's easy to be a good leader when everything's great. So I think it's been a really great journey for both of us. Yeah.
I mean, Mike's been very generous there, but look, for me, I did feel I knew Michael really well before we started, and in the sense of when we sat down and had that initial conversation, and then he was saying, "Yeah, I think this is interesting." That was a massive deal for me. Right? I would not have jumped in and done this without. I think Mike being one of the smartest people I know, someone with the integrity, someone who's calm under pressure. Someone who is going to. If they say they want to do something, you're going to do it. I think that was a massive deal, and the idea of having a co-founder was a big part of the journey. Clearly, there are people who can go and make a big success of being a solo founder, but I think that does take some particular. For me, there's just so much value in having someone I incredibly trust. In that journey. I think what I have been absolutely fascinated by is we do see the world quite differently on certain things, but it's fascinating when you get a lot of decisions that you need to get to work through together, and equal co-founders in a journey of just how often we actually are we're making the same call on stuff very quickly, right? So you can get to a team member asking a question of Mike or myself, and very confident that either it'll be a quick answer, and I wouldn't be second guessing the calls he's making, and vice versa. And then the ones where that's not the case, they are really the hard problems which we need some real thinking through. And so that's again, coming back to that point about the biggest thing in a startup is don't make the easy things hard, and then be very thoughtful about the hard things and knowing the difference, because you do need to move at some real speed. And so I think that's been, the idea that we've kind of gone through, great times, gone through hard times. Actually having, Mike as a co-founder has been an absolute blessing. And I'd actually call out a number of the team that we've been working with from before day one. Equally have been exceptionally great partners through, so I think getting a team that you trust, getting a team that you really feel like you go take on the world together, and that's something that's true on a good day and a bad day. There is so much resilience that comes, from the right group of people around you, and then of course, good talent, great talent as well. So again, we've been really fortunate, I think, to the set of Athenians we've had to go through, and so many of which are, 6, 7, some approaching 8 years. With us.
And what's been the secret to attracting great talent?
So I think there's a few things that we'd call out, but we'd also say there's definitely some good fortune in there as well. I think we started with we knew people that we really respected, and we went out quite specifically before this started and said, we'd love to work with you, we'd love to work with you. There was a couple of phone calls of come and have a lot more fun than the job you're in at the moment, and so it brought in some just truly exceptional people. And we did start with this idea of when we were 6 people, we were gathering the team that we wanted to, have this when this was a $10 billion business, not where we started. So that's probably the first one. I'd say the second one is there is real value in making some explicit choices about the culture and behaviors and what is the company that you want to be. And that's a little bit less important when there's just 6 of you, because that's really what you're doing day to day. But it's surprising how quickly you get to the point where you kind of do need to make those calls, because you'll be 30 people before you know it, and all of a sudden your culture is something that's emerging. And we kind of came with sort of a bit of a simple model, which is like, what do we want to be for customers? And then how do we be like that for each other, right? If you want to be a reputation of being straight up with customers, you need to be straight up with each other. If you want to be the point where you're going and disrupting things out there, you need to be kind of brave with each other. So we've come up with this idea to say the marketing proposition, the product proposition, and the employee proposition, it's so much easier. First things are all alike. But that wasn't, just to be clear, that wasn't Mike and I sitting down with some Persian cat in our laps sort of planning out, the world. This was stuff which was very much an open conversation with team members, and stuff that we organically had discussions about what is the real choices we want to make. And one of the things that are important to actually call out, so it's not just motherhood apple pie statements, but actually things that people are going to feel free to say, look, hey, let's be braver about this, right? Let's be, So I think they all end up being really important. And then I think the last one is about trying to therefore get accountability and knowledge sort of lined up well. People come because they are making an impact on the world that's quite different. These are people who could go and get great jobs in all sorts of places. They're here because they choose to be. And so I think there's a lot about, what is the purpose? How do you tell that story? What are the things you're going to be able to do and actually allow people to go and do some extraordinary things? And so that's where, the list of stuff that we can sort of talk about what we've done. And that's ultimately been assembling some amazing talent and then them executing really well.
Two things that you mentioned there, and I think the first one is that thing around getting to 30 people, and then all of a sudden, whoa. Actually, the data that I've collected over the last, 9 years of being in, specifically focused on fintech here in Oz, shows that those businesses that hired an HR person in the first 30 people have 50% less turnover of staff as they're scaling the business. Now, I kind of used to put that down to just the fact that it was an HR person there, but there's actually been some businesses that have bucked that trend where they didn't. But what they did was they focused on the culture piece and got real clear about hero values. And it wasn't they didn't just copy what Atlassian had done. It was very much a clear set of rules and principles of, hey, these are the behaviors that we don't tolerate, right? If we see them in me or you see them in anybody, it's called out and it's addressed straight away. So I think that was the first thing. The second thing that you mentioned that I think is really interesting as well is just these growing pains that happen in the business. They're now happening with those businesses that were, we're remote first and we got in and we're flying. They're hitting that 50-person mark and starting to now have exactly the same problems in terms of staff turnover and scaling challenges that happened when you had everybody in the office. So I think there's a kind of real, fundamental bedrock that needs to be in place, regardless of what your operating model is, that if you don't have the principles around a clear set of values that everybody has to adhere to and knows exactly what they are, you're going to be in trouble.
Yeah, and there's a certain amount of turnover that's inevitable and actually desirable. And we've got 140 people.
Yeah.
Our leadership team has been extremely stable.
Yeah.
Like as Nathan said, we're an exceptional HR person who does much more than just HR. Liana and people like Mara and Cam, as you identified, were joined before we even incorporated the business. So, but because they're so good and stable, and there's only 140 of us, inevitably, as people grow, they are going to hit the point.
Well, I think this is the challenge, right? And I've tried to explain this to people: is this isn't a corporate where you've got 5-year careers. That your business has been maybe 5 different businesses in this last 7-8 years that require different people with different skills to get you to the next stage.
Yeah.
And if it means that your journey is 12 months, but you make an impact, that's actually a great thing, right?
I think this is one of the topics where certainly my own growth has been sort of the biggest. I think Mike, you might be in the same place. So we came from a big corporate where we actually had really nice people, smart people in HR, but not empowered to really do very much.
Yes.
And we kind of came away, started this business with almost a point of view of you don't need one, right? So we were very much in the category of we're gonna work it through. We're gonna own the people problems, the line managers. We'll talk about cultural rest. And there was one of our investors at one stage who said, I think the problem is you've probably never seen a really good one.
Yeah.
And they made an introduction for someone who was not, we're purely just go and understand what this particular executive's perspective of the world and what she does and what it's all about. And sort of came away with, okay, that's, we'd sort of seen like, the lawnmower version, and that's the Ferrari version of what it can look like. And interesting enough, got an exceptional head of people, but not from a traditional HR background, right? But just with exceptional skills around change and people and community. And and she's built a very tight team to go and do some pieces. Absolutely fundamental.
So I'm going to transport you back to the last time that we did this 4 years ago. Kind of, going back to where you were then. If you were going to talk to your, 28-year-old or your earlier version of 28 years, what would be the words of guidance that you'd give that, those versions of yourself?
Well, I think I'd probably arrive with a very good quality bottle of scotch for a start. As I think, drink it.
What I'm about to share with you is going to be hot.
Early 2021, right? If that's when we spoke, and so I think we were probably at that stage really motoring along pretty fast, and feeling pretty pleased because there'd been clearly some major.
We were at the height, right?
Yeah, so really motoring along, and so I think we were sort of saying we survived COVID. Here's what we've done.
Yeah.
There were some moments in early 2020 and that were still pretty hair-raising. It was probably not really appreciating that was like only the first round.
Yeah.
things
the warm-up.
Yeah, not so much COVID, but actually the implications of unwinding, all the rest. That was probably when the much bigger components came through. I'm not sure we do much other than batten down the hatches just that little bit faster. Like we got some great advice from investors, and so we did move fairly quickly to get much more focused as a business and all the rest, and really pleased about that. So it's probably just almost realizing that the world was going to change and get ready for that. So, but probably just going through to say this too shall pass. That's literally all that we would have need to say, and then hand over a nice a nice Talisker or something like that for the right moment along the way. I don't know, Mike, what would you know?
I was going to say exactly that. The impact, I think we probably didn't appreciate the seismic impact of the, not so much COVID itself. People didn't stop borrowing through COVID, but the shift in the market and how deep and long that impact was. We're still dealing with the fallout of that in some ways. We've reoriented the business to be very strong now and growing really strongly, and it's fantastic at the moment. But that original model would still be sputtering along if we hadn't have done all of the work over the last few years. And I think, so I was going to say the same thing. It's just understanding the seismic nature of that shift in the market would be the main thing. But again, what could you have really done differently? I think we did move pretty quickly to face into the reality. Yeah.
I think it is interesting over that time period. So we clearly went through a process, and we sort of talked to some just amazing founders out in the ecosystem who are going through. I think what sort of every scenario different, but what's the common core was that idea of really zero basing your business.
Yeah.
Right. Really start from the ground up and go, what's the resilience that you need in terms of having a really compelling proposition, not just for today, but thinking 2 or 3 chess moves ahead.
Yeah.
What's the range of uncertainty of what could happen, and how do we make sure we're set up for that? And then what are the building blocks of the business system that you really focus your investment on, the things that are most important, right? And so I think there were a lot of things that were actually really great ideas that we started trying to do them all in parallel, as opposed to, no, let's really focus on our superpowers, get that done, then this done, and this done. Productivity of that focused business system is just, so much greater.
Well, I hope I actually don't leave it this long, but if we were doing another podcast another 4 years from now, what would you kind of love to see happen in this next 4 years, and where would you like to be?
Well, I actually think we've got the building blocks in place now to be on a really strong trajectory. And even if you were to look at the kinds of propositions we've got or we will have in the next year and the distribution arrangements, I think we've got the building blocks to really have a super scale business, right? We will be profitable this year, right? Which is a couple of years after we thought we would be, just with the disruption, but still it's a great milestone. And in 4 years' time, we'll have a sizable business where we should be pushing the size of, one of the regionals type in terms of the book size is where we'd want to be, and we'll have still a super tight culture and a super tight business, but it'll be a significant scale. We're not satisfied just with playing right in a very small part of the market. We want to be a big player.
Brilliant. And for you?
I agree with Mike there. I think in some ways, this is now an execution story.
Yeah.
We've got an exceptional team. I think we've got a really clear view of what we're wanting to do. And this is now, how do we go and change home loans at real scale? The partners that we've got represent a very significant share of the entire mortgage market opportunity. I think funding side, similarly, we've got just great support around what we're doing. And in some ways, it's nice where you sort of think about building a house.
Yeah, I was going to say, how does it feel now that you're for the first time in 8 years, you're not earning the right to the next 6 months?
It's building a house where there's a lot of time that it's not always visible, where getting the foundations and getting the slab and all of those components. And then things can really move from there. Kind of get everything.
Well, if you think about it, this 8 years, right? You've been laying the foundations and somebody's been behind you with a sled.
That's right. So, but I think where we've got to, even over the last, 2 or 3 years of broadening out, adding distribution partners, adding products, breadth, and we're talking about some really foundational pieces, right? So we're moving from sort of, the simple loans at a price to some really sophisticated, talking about splits, you're talking about offset accounts, you're talking about multi-collat, you're talking about, self-employed like doc, you're talking about companies, you're talking about trusts. We really started to talk about quite a broad part of the market that we really believe we can deliver exceptional value, and we're having some of the best brokers in the country are recommending us as being one of the really big parts of their menu. So I think from here it starts to go, there's lots of simple opportunities to say, where do we go from here? And I think we've got a clear line of sight of both product and distribution and funding components. So I think I 100% agree with Mike, as we look pretty excited that we're only a couple of months away from passing through our 10 billion of loans settled. I mean, that's a pretty big milestone, and we're looking to be well through double that in terms of the size of what we've actually gone through. I think what's exciting is you look to other markets around the world. Non-banks are over half of the US market. They're roughly a third. Parts in Australia, it's only about 5% of the market, and so there is a real opportunity to give Aussie borrowers, Aussie brokers more choice, to actually have technology that can deliver better solutions, that we can really begin bringing those insights to say, how do we make a day in the life of someone owning a home who needs finance that much better? And so I think that's where we're really excited. These foundations where we've established ourselves as a funder to say, right through some market events, the loans we write, exceptional quality, therefore we're rewarded by great funding costs, and therefore we're able to provide a great deal.
Well, guys, it's been really generous of you to kind of share all these insights and the journey that you've been on. Before we wrap up, though, we do have some amazing talent listening to this podcast. If anybody's interested in careers at Athena, where's the best place for them to go?
Well, email either of us, get hold of us on LinkedIn, and we'll get your details through. Do we have a particular HR email address? I'm not even sure we do. Do you know it?
I think it's specific to particular.
Yeah.
Get hold of us on LinkedIn and we'll get your details.
Yeah. Cool. Well, I'd hope that they've got the critical thinking skills to be able to find the right contact details. As always, folks, thanks for joining me. If you're new to the show, make sure you follow us wherever you listen to podcasts or on Fintech Chatter TV on YouTube. If you're coming back, thanks so much for your support. It really means a lot to me, and it really helps me in getting great guests like Michael and Nathan onto the show. Until the next episode, keep well.